Welcome back, everyone. Thank you so much for staying with the program. About 26 banks will need to raise about 3.972 trillion naira in the next 24 months to be able to meet the capital base threshold set by the Central Bank of Nigeria. Last Thursday, the Apex Bank announced new guidelines on its recapitalization policy for banks in the country. The CBN directed commercial banks with international authorization to increase their capital base to 500 billion naira and national banks to 200 billion naira. Similarly, non-interest banks with national and regional authorizations will need to increase their capital base to 20 billion naira and 10 billion naira, respectively. Tonight, let's make sense of this new directive and what it means for the Nigerian financial system. And as always, Dr. Yusuf, CEO, Center for the Promotion of Private Enterprise, is here with me in the studio to help us break down this issue. Dr. Yusuf, thank you so much for joining us this evening. Right, so almost 2 decades since the last exercise. What do you think prompted this new guidelines?
Well, I think that is where we should actually start from. Okay. Because the last recapitalization we had was in 2004.
Absolutely.
And it ended in 2005. That's almost 20 years. Now, at that time, for national banks, it was 25 billion naira. I think for international, it was 50 billion. 25 billion at that time was an equivalent of about $130 million. $130 million today is about 250 billion naira. In other words, the 25 billion naira as at 2004 is equivalent to about 250 billion naira today. And when you also relate that to the international capitalization requirements, at that time it was 50 billion. 50 billion at that time was an equivalent of about $380 million. By today's conversion, it's almost 500 billion naira.
That's true.
So based on adjustment for inflation alone, we can say that in real terms, nothing has changed.
Okay.
We are really adjusting just to preserve the value of capitalization at that time and now. I think one thing that we need to speak to is the need to ensure gradual adjustment with time, so that what we are dealing with will not just be something that is static. It has to be something that is dynamic, you know? So if we had been adjusting gradually since 2004, 2005, the shock of recapitalization will not be that much. So there is something to be said about gradual adjustments over time, so that you don't wait until 20 years after before you now begin to review. But generally, I think this is a policy that is desirable. It's something that, just as the CBN has said, is something that will help to ensure that we have a stable financial system. It's something that will help to strengthen the resilience of the banks, because you also need very strong capital to be able to do big businesses. It's just like the foundation of a building. If you are building a bungalow, you cannot compare the kind of reinforcement, the kind of pillars, the kind of foundation you will need, compared to when you are building a skyscraper or a 3-story building.
Right, but some economists have said this is just an icing on the cake for the top 10 banks or the top 5 banks with international exposure. Do you agree?
Well, they will also still have to mobilize a lot more capital, because for all of them, there are still gaps to be met. Altogether, just as you said in your intro, we are talking about close to 4 trillion naira capital that needs to be mobilized across board. So for the big banks, of course, many of them are much closer to meeting this capital base. They have the clout, they have the capacity to easily mobilize it, which is good. But I also need to also make this point that it is good to have big banks. But there's also a place for the small banks.
Absolutely.
Because this economy is driven largely by SMEs. The SMEs contribute about 50% or more to the GDP. Now, we also need to be careful the way we overemphasize or the way we emphasize big projects and big banks.
Okay.
Because big banks will be looking more at big projects. Okay. Smaller banks are likely to be looking more at smaller projects. And you need a lot more of even the smaller banks to be able to feed the small businesses. Because from what we have seen over time, the financing gap at the level of the SMEs today, by an estimate done by the IFC, that's International Finance Corporation, the financing gap as at last year was about 32 billion US dollars, which is close to over 40 trillion. That's the gap in terms of financing. So if you really want to unlock a lot of potentials at the level of the SMEs, there's a whole lot of work that needs to be done. So we need to ensure a balance between this idea of ensuring that you have more big banks. We need to ensure that this financing gap at the level of the small businesses are also met. Because the small businesses have a very big role to play in terms of job creation, in terms of economic inclusion, in terms of economic diversification, in terms of linkages with other sectors of the economy. So they have a big role to play. So we have to be mindful of that. Right, so these banks are good, but small banks are also very necessary.
So you think, or you have the strong belief that the smaller banks have the capacity to meet up with these requirements?
Well, some of them will have to struggle.
Merge?
Yes, some of them may have to merge. Some of them may have to be downgraded, maybe from national to regional banks, which is good that we have different layers, unlike what we had during the first recapitalization, where that opportunity was not there. So if they cannot meet with the requirements for the national bank, they can become regional banks. So that's a window for them. But the point I just like to stress is that both the small banks and the big banks are equally very critical for the growth of the economy. Because I've heard this talk about, building big banks to be able to accelerate our achievement of the $1 trillion, dollar economy. Yes, but both the big banks and the small banks have a role to play in the delivery of that. Both the big businesses, the medium businesses, the SMEs, the micro enterprises have a role to play in contributing to the growth of the economy to achieve the $1 trillion.
So I agree with you, Dr. Yusuf, but I would like you to help me broaden your perspective on how these new guidelines, this recapitalization can benefit the banking sector.
Well, it will benefit the banking sector in a number of ways. One is the fact that you need a very stable environment, because if the banks don't have the capacity to match their exposure, it can weaken the stability of the banking system.
Do you think these banks are in distress?
They are not in distress. They are not in distress. But you don't have to wait until they become distressed before you prepare them for the challenges. Because over time, we have seen a lot of macroeconomic headwinds, a lot of challenges, but happily, if you look at all the metrics of what you call the financial soundness indicators, our banks are generally very healthy. You have what you call the capital adequacy ratio. If you look at the ratio generally, our banks are doing very well. You have the non-performing loans ratio to the total loans. Generally, we are also doing well. If you look at the liquidity ratio across the banks, they are doing well. And that is a testament to the fact that the regulatory authorities, that is the CBN, NDIC, have also been doing a lot of work to make sure that there is that standard in terms of the stability of the financial system. But again, you need to be forward-looking. The challenges ahead are there. We want them to be able to do a lot more So that is why it is necessary to prepare them. So just as the CBN said, it is to ensure that they have the capacity to also fund bigger projects. As we speak today, there are projects in the oil and gas sector that our banks cannot finance because of financing limitations or capital limitations. There are projects in the aviation sector that they cannot finance. There are projects in the maritime sector that they cannot finance. So if they have bigger capital, they can do bigger projects. So that is one primary reason. Secondly, you also need to have a banking system that have the capacity to absorb shocks. Shocks, because sometimes there could be challenges in the economy. And if you don't have the capital base to support the system, the bank can go under or become a liability to the nation, just as we are having some banks now with AMCON and all of that, where we are using state funds to be able to support them. It is very, very costly. So from the point of view of the capacity to fund bigger projects, that's a plus for the economy. From the point of view of the resilience of the banks themselves, that's a plus for the economy. So no matter how you look at it, it's a very good thing.
All right. So someone was asking me this question yesterday. I said, okay, I'll pose this question to experts. Are fintech banks affected?
No. From what I have seen, no. No. What the CBN has said is about banks.
Okay.
Deposit money banks. That is what.
All right. So what likely fallout should we expect from this decision by CBN?
Well, the likely fallout is that first, the mergers may create some challenges. Because for banks that are not able...
For the banks? For the economy or for the banks?
No, for the banks, likely. Right. For the banks, likely. Because for the smaller banks, luckily we have about 24 months to be able to deal with this.
Is that enough?
I think it's enough. I think it's enough. But again, sometimes when you go into merger, there could be differences in terms of culture, in terms of approaches. There could be risks of job losses. Because if you have a new arrangement, a consolidated bank, the system may not be able to carry everybody along. Absolutely. You know, there could also be some risk to shareholders. Because in the process of the merger, there may be a dilution of the shares. There may be a revaluation of the shares. So if your shares were valued maybe at 100 million, by the time you go into a merger, it could reduce. So that's a likely possibility. Another possible downside that one can look at is that if you have the big banks and they have so much money and the opportunities are not there for them to invest the money, that could be an issue. Okay. Because if you are stuck with too much capital and the opportunities are not commensurate to the amount of capital you have, that's what we call asset bubble. Asset bubble is that when asset prices begin to rise, not so much because intrinsically their value has increased, or because there is so much money chasing those assets. Okay. So that is an asset bubble. At any point, that can burst. We have seen that happen in the capital markets. It has happened to properties. It can happen to any asset. You know, that is also a risk. Then there is also the downside or the possibility of building an oligopolistic structure in the banking system. Oligopolistic structure is when you have very few banks, controlling practically everything, And when you have that kind of structure, there could be the challenge of, they dictating the pace of everything, because the scope of competition has been reduced. Because of the high capital, a lot of them have fallen aside. And when you have a weak competition environment, it's not good for the economy. Because in any environment, competition is the best way to protect the customers or the consumers. So when the competition environment is weakened, it's to the disadvantage of the economy and the disadvantage of customers. So these are some of the likely downsides of this.
All right. So if there's a tendency that we may have few banks or fewer banks, but on the other hand, we continue to say we do not have enough banks for a country with over 200 million population, how do we reconcile both?
No. Well, fewer banks does not mean that the bank doesn't have the capacity to meet the needs of the economy. It's not a question of the number. It's a question of capacity. You can have a bank that has branches all over. Just a single bank. The bank can have presence in every nook and cranny of the country because it has the capacity. And you can have a bank, it's a bank, but it just has one or two branches. So it depends on the capacity of the bank to spread out geographically and across all sectors. I think that is primary. Right. But what I think we need to emphasize is the stability of the banks, the viability of the banks, their resilience. A banking system that will be able to ensure that the customer's funds will be safe, deposited funds will be secure. I think that is primary, So I think that is a primary objective of this. But just as I said, you could also have a small bank that is very stable.
Right.
And again, because of the size of the economy, because this circular has not addressed the microfinance banks, for instance. Nothing was said about them. I think we also need to look at that because they are closer, to the grassroots, they are closer to the micro enterprises and all of that. But we need to be careful not to exclude the SMEs, the micro enterprises in the economy, because there is the tendency for the big banks to be looking more at bigger projects so that we don't create a problem of economic inclusion. Absolutely. That is something I think we need to caution.
So, Dr. Yusuf, how does this decision attract foreign portfolio investment?
Well, the way it will attract investment, which is also one of the positive things, is that in this drive for capital, some of the banks may attract foreign capital. That's capital from abroad. Because now we have reformed the foreign exchange environment. This is a very good thing. The environment is a lot more liberal. Foreign portfolio investors are now better disposed to bring in their funds into the economy. And all of them are also looking for opportunities. And when they see opportunities in the banking system, it's one of the best opportunities you can have. So because of that, we also foresee that quite a number of foreign investments will come in terms of portfolio investments, which is a good thing. So, and that will also help in terms of our desire to mobilize foreign exchange, to strengthen our reserves, and so on and so forth.
All right. So
this is a great opportunity to attract investment.
Absolutely. So the CBN is also is trying to ensure that this capital raised during this process is free from illegality, hence its partnership with security agencies. How do you think the CBN should go about this to avoid us going back to square one?
Well, the CBN has already made it clear about the kind of capital, the components of funds that should form part of the capital. There were issues about shareholders' funds, there were issues about retained earnings and all of that. Some of those things have been excluded. What the CBN wants to see is fresh capital. So, and that is why I think the CBN is partnering with the security agencies to ensure that we don't see proceeds of, illicit funds and all of that going into, buying shares and investing in these banks. So I think it's not something the CBN alone can do. It's something that the CBN has to do in conjunction with the security agencies. But again, I need to caution that the security agencies also need to understand the process. They need to understand the financial markets so that they also don't go and start harassing people unduly and scaring investors. Because if you don't have good knowledge about how a process works, what is normally legitimate may look to you as illegitimate. And before you know what is happening, you'll have embarrassed some investors and all of that. We have seen that in the past. So while it is good to invite the security agencies to be part of this, they need to be properly educated on what exactly they should look out for, to be able to distinguish what is likely to be proceeds of crime or illicit funds from legitimate transactions. That is very important.
All right, so overall, CBN is on a good track with this one.
No, it's on a good track.
All right.
But we need to also be sure that if there are possible fallouts, just as I said, we need to ensure that we manage it. For instance, as much as possible, we don't want to see job losses in the banking system. Secondly, the CBN needs to assure depositors that no matter where your fund is, no matter the bank, all our banks are safe and sound.
All right, that's very important.
So that there is no anxiety about rushing to move your account from one bank to the other. And it's also important for the CBN to caution the banks, because sometimes some banks tend to take advantage of this situation. Okay. Some banks tend to demarket others and say that you are a big bank, you better move your account. All those things. CBN needs to be on top of that and ensure that there is confidence that there is no problem with any bank. All the ratios are good, the capital adequacy, the liquidity ratio, the non-performing loan ratio, everything is okay with all the banks. That assurance is extremely very important. Yeah.
Thank you so much, Dr. Yusuf. Let's take a break, and when we come back, we'll move on to Naira appreciation.